Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching Indian Open. I am Shah, and Ira, afraid it doesn't promise to be a very good morning.
It doesn't, does it? Good morning in any case to you, Neeraj, and to all of our viewers. Let's get you the headlines this morning. Global equities slide as 10-year US Treasury yields hit the 3% level for the first time in 4 years. Asian stocks followed their US counterparts lower. Fortis Healthcare gets 3 new offers ahead of the advisory panel's evaluation of bids. IHS and Radiant put in binding bids. Manipal too sweetens its offer. A tax write-back helps Bharti Airtel post a surprise profit in the fourth quarter. And Nifty companies Wipro and UltraTech Cement will report their earnings today.
Well, it's a packed day. It's a packed first half an hour on First Word as well. Let's start off with the trade setup for the day. And need I say more? The US markets and what they did, and the Asian screen and how it is looking sets it up for you. We will have a pullback for sure. Question mark only is how strong a pullback could it be? The US markets were certainly lower. I think the earnings picture out there too. I was listening to the podcast in the morning and Alex was mentioning about how Caterpillar said that this was the best quarter for them and the remaining 3 quarters will not be good, and then the fall only accelerated if that really had the bearing to do so. But yeah, all the 3 key indices ending in the red, and our markets are following suit. The SGX Nifty for now is not really indicating a bloodbath, just about 0.5%, but it promises to be a start which will be in the red. And then if Europe starts off even lower, or Asia the fall gets exaggerated, then you have some fun and games out there on the downside. The reason you could argue that the 10-year, the yields in the US hitting the 3% threshold. Remember, we were talking about this with Priya Misra yesterday as well, but it has finally happened, and I think there will be a lot of conversation around this during the day today on Bloomberg Quint, but also on First Word. I'm sure Ida has a point or two to mention out there, but I think this is the key reason why the US markets sold off in the session yesterday. Our markets were okay. Yesterday we didn't see too much of a build-up on the options side. The volumes were par for the course, and volatility in fact for our markets plunged to the lowest level in calendar year 18. But one would expect that this will rise today's session and tomorrow because it's expiry as well, rather day after. So it will be an eventful next 2 or 3 sessions that we'll have for our markets as well. But before I get to stocks, Ida, the big elephant in the room, we were talking about this yesterday, that what happens if now it's finally happened.
Yeah, so I think, as you've all been discussing, various sort of changes in estimates come into play, right? I mean, how do equities compare to bonds? What happens to the comparison between the dividend yield and the bond yield? And if that gap is narrowing, then why would anybody go to the risk of equities and not just stay with the safety of bonds? Then those are sort of the equity versus bond comparisons. Then, as Priya was pointing out yesterday, what is happening to real rates? Real rates is what actually hits companies in terms of their cost of finance and their ability to generate earnings. What happens to the economy in the US if real rates are high? There are just so many questions. But I think, and if you read some of the articles that are there on Bloomberg Quint written by, our colleagues at Bloomberg News, they're questioning where it goes from 3. Do we go very rapidly from 3 to 3.5? Probably not. So I think a couple of comments that were there in those stories suggesting that perhaps 315, 320 is a more reasonable level to expect. So the pace of rise is important, as also is the level to which it rises, and then whether the impact starts to show or not.
Okay, I tell you what, while we were talking about stocks to monitor, and Airtel would have been that big stock to monitor, there is news bits on the screen. If Fortis wasn't enough, we have the other big news on the screen, and that is Bharti Airtel has approved the proposal to merge Indus with Bharti Infratel. Well, it seems to be a telecom first word to be honest, in addition to Fortis. So I think those are the stocks to monitor. Sumit will be joining us in moments from now. But remember, this now makes Bharti Airtel a stock to monitor on more counts than one. Yesterday, they posted what a lot of people would say a surprise profit, simply because it was expected to post a loss. But hey, it's posted a profit that would have anyways led to the stock reacting a bit in the session today. Now, not so much for Bharti Airtel, but Bharti Infratel, which came out with the numbers day before yesterday, had a minute reaction in the session yesterday. I mean, ended the day very, very flat, probably on account of the fact that this was going to be anticipated. Now this has happened as well. They're going to consider stake sale in Indus post-merger as well. So this is the big news that is hitting the screen, Ida.
Samit will join us, but just reading out from the press release some of the numbers, and you have that on your computer as well. The merger ratio, I think 1,565 shares of Bharti Infratel for every one Indus Tower share. That's what they have said in the press release, and that ratio is within the range recommended by the independent valuer. The transaction values Indus Towers at an enterprise value of 715 billion Indian rupees. So that's about 10.8 billion US dollars. So those are the initial details coming out from the press release, which has just hit our computer screens.
Yeah, this should be interesting. Now remember, as I said, not unanticipated. This was on expected lines. So before we get to first one and talk about Fortis in greater detail and Bharti Airtel in greater detail as well, I think it's pertinent to address this. My computer is playing a few tricks with me right now, but I'm told Samit is with us. So Samit, fill us in on what the implications of this could be.
Merger of Bharti Infratel and Indus is on expected lines now. It will be a merger, and Indus will be Bharti Infratel will be giving shares to the shareholders of Indus Towers. Now in Indus Towers, it is Bharti Airtel which owns around Bharti Infratel which owns around 42% stake, while the remaining 58% stake is owned by Vodafone, Idea Cellular and Providence Equity. Now Bharti Infratel will be giving 1,565 shares for every one share of Indus Towers, which means that the Indus Towers is valued at close to 71,500 crore rupees. Now, I have not worked out this calculations as of now. This is through the press release of Bharti Infratel that has come out on the exchanges. And Idea Cellular, which owns around 11.15% stake in Indus Towers, has the option to either take the shares or to sell its its stake to Bharti Infratel at around 6,500 crore rupees. That is nearly 1 billion US dollars. Now, the merged entities valuation is, we are yet to find out the merged entities valuation. But so as of now, this is the detail that we have, and it is a merger swap ratio, and the swap ratio is 1,565 shares of Bharti Infratel for one share of Indus Towers. And post this, Vodafone will have around close to 33% stake in the merged entity, while Bharti Infratel's shareholding in the merged entity will also come down, and we'll have to figure that out. As of now, we are still waiting for further details.
Okay. I was just trying to pull out if we have some further details as well. I think Samit has put up everything into picture. We have the merger ratio as well. Time now for some calculations. We'll come back with all of those as well. So this is an interesting piece of news which has hit the screen. Airtel would anyways, as I said, be in news for more reasons than one. The results that came out yesterday, that should also have a bearing. So give Samit time to breathe, come back and tell us what would this mean for Bharti Airtel, and then of course the implications for Infratel as well. But let's kickstart first word with the first piece of news, and the big one that has been a developing story over the last few days, but certainly developed big time over the last 12 odd hours. The war for control of Fortis Healthcare has intensified, and Yatin Mota is here to talk about that. You know, it brings me to that line that if an asset is pretty, the suitors will come in, and that certainly has happened now. Now we have, what, 4 binding offers compared to what, 1 earlier or 2 earlier?
Yeah, so we had 2 binding offers earlier. One was from Manipal and one was from the Burmans and the Munjal family office. Now we have 4 binding offers. Of course, the nature of the binding offers has been different in all the cases. Now let's talk about the Manipal offer, which has been revised for the 3rd time. And interestingly, they have proposed a few changes to the previous structures. Now, they plan to revise the hospital's business valuation upwards to 6,322 crores, which was earlier in the first offer was close to 5,000 crores, which got revised to 6,000, and now it's little over 6,300 crores. They also will provide, 750 crores as a loan, or a debt infusion immediately from ICICI Bank, which was not earlier the case. So, this will probably improve the liquidity condition of Fortis Healthcare. They'll probably pay off money to the employees as well as the immediate, creditors who have been recalling loans or, are looking to collect the interest. Also, they propose a, rights issue as decided earlier. But more importantly, they also will look at a 26% open offer for the hospital's business, which will be demerged later on. Also, they propose, some changes for SRL. They have put 2 new conditions for SRL, which is the diagnostics business. They'll buy a 5% stake from Fortis Healthcare into, the diagnostics business. Of course, this will be at a valuation similar to what they pay to the private equity investors. But also, they propose to retain a 51% voting rights into SRL. So, this is something new. So apart from buying 5%, they also want to retain a 51% voting share, despite the fact that Fortis Healthcare shareholders might hold majority of the shares. And the open offer, as I was telling earlier, a 26% open offer in the new hospitals business at a price of not less than 121 rupees per share.
Okay, so this is offer one, a sweetened offer at that. What about the others, Yatin?
If you look at IHH, they came out with a binding offer to infuse 650 crores only. So the original proposal was to infuse, 4,000 crores. Now they intend to put a binding offer to immediately put in 650 crores, and the remainder 3,350 crores comes in after the due diligence and appointment of 2 directors. So they want to appoint 2 directors and immediate access for due diligence, which may take 3 to 4 weeks. And also they have put a condition that the board needs to respond to this offer before May 4th. So the offer is valid till May 4, 2018. And the proposal stands withdrawn if there is no response given by the board of Fortis Healthcare.
Okay, so not a big material difference out here in this one. What about the last one? And what does this mean for? I mean, what do all of these mean for a Fortis shareholder, Yatin?
So let's talk about Radiant, which came out yesterday with a revised offer. This is the second revision that they have done. They are backed by private equity player KKR. Now, they propose to give a binding offer only to buy the Mulund Hospital of Fortis Healthcare for an enterprise value of 1,200 crores. So, if you were to, cut down on the debt portion, the net proceeds that Fortis Healthcare can receive is probably 630 odd crores. Also, they say that they will be demerging the diagnostics business and the hospitals business. They don't intend to do any structural changes in the diagnostics business. They only, want to hive it off. But on the other hand, for the hospital business, they would like to do an 26% open offer at a price of not less than 126 rupees per share. And also moving forward, they plan to do a rights issue in the hospitals business, which is the demerged entity, to fund the RST acquisition.
Okay, so that's all that you need to know about Fortis. Yatin, thanks for putting all of this into perspective. So that is the one big piece of news. The other big piece of news, of course, which is flashing on your screen, that there will be a merger of Sunil Bharti, Mittal-backed Bharti Infratel, which has decided to merge Indus Towers. Let's get in Nitin Soni of Fitch Ratings, who joins us on the phone line to talk about this. Nitin, good having you. Thanks so much for joining in. Not on unanticipated lines, but what's your initial reaction to this? Because across the board, when we speak to people, they say that while this has limited synergies, it does complete the pan-India footprint for the business.
Yeah, thanks for having me on the show. I think this was on expected lines. I think the plan is to have more private equity investors in Bharti Infratel, and Bharti Infratel eventually buying out the Vodafone and Idea stake in Indus Towers and eventually merge Infratel and Indus together as one entity, which will clearly create the largest tower company in the world. And it will also create a lot of economies of scale and synergies for these 2 entities, especially the savings from the dividend distribution tax, which is a leakage to the government right now. That will be plugged if they merge together. Overall, we believe that there is a lot of growth still to happen in this space in the industry, as that Jio has and requires at least 200,000 towers in the market to offer its networks. So the minimum requirement of towers increases now to 200,000 for all the incumbents. And as we go along, and that there are frequent call drops, and the data traffic is growing phenomenally well now. So we need to continue to add more towers in the industry to decongest the network, to address this significant growth in the data traffic. And a couple of years down the line, when the telcos start rolling out the 5G networks, they will have to further invest in the towers and 5G equipments.
Interesting. Nathan, hold that thought, because I have one more question for you, but I'm told Mahesh Uppal, telecom analyst and director of consultancy firm ComFirst, also joins us on the show. Mahesh, good having you. What do you make of this deal? Not on unexpected lines, as Nitin was saying as well.
Yes, I broadly agree with Nitin. I think it was on expected lines. There is no doubt that This is very much in line with the kind of consolidation we are seeing in the sector. And however, the tower business, despite the fact that we need over an estimated 2 lakh towers, is still struggling in many different ways. The consolidation has also had a major impact on the tenancies of these towers. Earlier, when you had close to 10 players in the market, several towers had a larger number of tenants than they do now. So this is we will have to wait and see how this goes. But I think consolidation is on expected lines, and the deal is on expected lines.
Okay. Nitin, this brings one to the question of what it would mean for both of these firms individually as well. And Airtel, I mean, from a shareholder's perspective or an equity watcher's perspective, was expected to post a loss, has managed to post a minor profit, but that's only, semantics, really. This deal helps them eventually go out and shed some more debt as well. How important from an Airtel perspective is this one?
See, I don't think it is going to affect Airtel in any significant way, because we are not expecting Airtel to get any cash out of this deal. I think the cash, which will probably come from the private equity investors in Infratel, will go out to buy the stake in Indus. So we are not expecting even a cash injection by Bharti in Infratel to increase the stake. On the contrary, they have been selling the stake in Infratel gradually, and now they are around 53%. And I think last year they created a separate structure for this company, merging it into an Airtel infrastructure with a view to eventually dilute their stake to a minority. So I don't think it will affect Bharti's rating, which is a BBB- stable outlook right now. But I think from a tower entity point of view, it will create a truly independent tower company. So at the moment, maybe, Reliance Jio or Voda Idea could be, not Voda Idea, but specifically Reliance Jio could be reluctant to have large leases with Infratel or Indus, given they are owned by Bharti, Voda and Idea and other private equity partners. But after this change in structure, it will truly become independent, and it could attract a large number of leases from Reliance Jio going forward.
Okay, Nitin, we'll leave it at that. Thanks so much for taking the time out and speaking with us. Mahesh Uppal, your final thoughts, really? I mean, I take on board the point that this doesn't materially move the needle too much for Airtel. But, hey, they are going to now find potential suitors for the same as well. They are going to consider the stake sale in Indus post the merger too. Anything at all?
Yeah, I think it adds to the efficiencies of this sector, but I think we should not be we should not forget that both the tower business as well as the wireless business are facing tremendous challenges in the market, and we must temper our views of the tower market based on these things.
Appreciate, gentlemen, for joining us this early in the morning. I'm sure we'll dissect this one in greater detail during the course of the day. And for more on the story, log on to www.bloombergquint.com. In a bit, the full analysis of this piece also will be out there. So the two big newsmakers, Bharti Airtel, Infratel, and this whole news which is breaking today, as well as the results yesterday, as well as Fortis, dissected. Yesterday, if you logged on to the site, there's a very interesting piece. The impact that fuel prices have, right, on the economy, on a multitude of factors, and the way petrol prices are moving up, and diesel prices too as well, by the way. I must add those two.
Yeah. I think the piece should go up today. Has not gone up.
Excuse me for that. I saw it on the mail and I thought it's gone up today already.
But I think, I know big deal stories, but just briefly talking about something that is becoming more and more relevant, and that is how oil prices are going to, impact the economic math. And you're, as usual, 4 years later, after 4 years of calm, you're back to the position of trying to decide what to do with oil prices in various aspects. There's the fiscal, the government finances aspect, there's inflation, and then there's the current account deficit. Remember, there was news coming in a couple of weeks back back, suggesting that the government is not in favor of cutting excise duties, even though excise duties have been piled up in the 2015-2016 period. But the reason they are not in favor of it is because government finances are hardly in the pink of health. So it looks like they're going to, at least for now, hold on to those excise duties. But if they were to cut excise duties, you know, a 2 rupee cut would probably mean a 28,000 crore revenue hit for the government. So that's one thing that they need to keep in mind. But there is a double whammy on government finances from oil, because it looks like in this year's budget, the government has underprovided for in terms of subsidies on oil products. So they provided for subsidies, you know, about 25,000 crore, which was more or less on par with last year. But economists estimate that at $65 a barrel, the subsidy bill will be about 5,000 crore higher, and at about $75 a barrel, it would be 10,000 crore higher. So the government has to consider a revenue impact if they were to cut excise duties, and they have to consider a subsidy outgo if prices are higher. So, you know, those two things have to be balanced out. Why should they consider an excise cut right now? Because, well, inflation is rising, and the government has to be worried about that. You know, fuel inflation tends to seep in to pretty much all aspects of inflation via transport costs, etc. And the inflation math is this, that the RBI has projected inflation between 5.1% to 4.5% in FY19, with the higher inflation expected in the first half of the year. Now, if the oil price is about $10 per barrel higher, and I think the RBI had budgeted for about $68 a barrel. If you assume that it's $10 per barrel higher, then you add 30 basis points to that inflation forecast. And in that scenario, perhaps the Monetary Policy Committee would be a little bit more hard-pressed to explain a status quo stance, and may need to consider rate hikes or a tighter monetary policy stance a little bit sooner than expected. There is also a growth impact of oil prices, you know, because it takes away from the consumer's budget, which could then go into other items. So the estimate from the RBI is that a $10 per barrel increase over that $68 per barrel level would hurt the forecast by about 10 basis points. The RBI estimates growth at about 7.4% in the fiscal year that we are in. So, you know, you can balance out some of the inflation and the government finances impact should the government decide to bring down the excise duties. What you can't get away from is the impact on the import bill. And there the numbers look something like this, that if you have a $10 per barrel increase in the average crude price, then you take a hit of about 0.3% of GDP on the oil import bill. That, of course, at a time when portfolio flows are slow, will impact the currency, which in turn will lead to higher imported inflation, which again comes back around and puts pressure on the government to do something about at least the excise part of the entire oil story. So tough decisions. And the point simply is that, you know, the 4 years of macroeconomic calm that we had, yes, the government's policies had a role to play in it. Yes, the RBI's policies had a role to play in it. But at the core of it was low oil prices. And now, as oil prices make a comeback, or high oil prices make a comeback, all the familiar dilemmas that India has faced for years on end are back. And
the constant chat about what the government could have done better with the lower oil prices savings then always remains, right? Always. I mean, there are opinions divided on all fronts. And
we've never managed to, you know, do anything about it. In fact, at some point there was a talk about building a strategic reserve when oil was at 30, 40. I haven't heard a thing that's moved on that front.
Yeah, okay, interesting piece. Ida, please tweet about it soonest so that I can retweet it as well. But thanks so much for that. Well, that's all that we have on First Word today. But we'll be back with the day's trade in just moments from now. So stay tuned to Bloomberg Quint Live.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. the SME growth platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still watching Indian Open with us on Bloomberg Quint. Let's do a check as to what's happening with the Asian markets right now. Well, the start has been on a negative note this morning, considering the handover from US markets was negative. Nikkei currently trading with cuts of 144 points. Hang Seng down almost 1%. Shanghai also trading with cuts of almost 11 points as we speak. And SGX Nifty this morning is suggesting a downtick of nearly 48 points. Remember, yesterday we managed to close above the mark of 10,600. Let's check then what sort of cues we are getting from the derivative space. And Agam Vakil joins us with the same. Hi Agam, good morning. A sharp fall in India VIX was seen in yesterday's session.
Good morning, Navneet. Yes, and we're also starting to look at rollovers pick up quite substantially. In fact, when it comes to the Nifty rollovers, currently standing at a little less than 28%, slightly higher with 2 sessions to go for expiry. When it comes to the Nifty Bank as well, we have seen a little bit of an uptick, now standing at around 31%. It's the same with respect to the previous 3-month average, just a notch higher. But when it comes to other crucial variables such as the India Volatility Index, that's now fallen below the mark of 12. And the put call ratio, on the other hand, has risen to around 1.7. In terms of changes in open interest too, across a lot of these options, what we are witnessing is, well, unwinding in the 10,500 calls and puts, as you can see here, and a little more writing coming along when it comes to the 10,600 put. So some base formation there, and a lot of changes when it comes to stock futures in bands as well. So walk hard moves into the band. On the other hand, 3 stocks which move out of the band include Jet Airways, JP Associates and TV18. We've seen a lot of longs accumulate in GMR Infra even as the stock moves up by as much as 7%. Do remember, this is only the open interest for April. Across all series, we've seen accumulation, and it's the same when it comes to stocks like ICICI, Prudential, where the underlying moved up by as much as 8%. We did see more accumulation coming along as far as your open interest across all series goes. So plenty of stocks once again will remain in focus, and a lot of earnings coming in as well, and that's something that could eventually move the broader market indices as well.
Thanks a lot, Agam, for bringing those F&O cues. Remember, today is the penultimate day for the April series to expire. So far, the series has definitely been good. But let's bring in our fundamental guest on board. Parthiv Shah, director at TRACOM Brokers, joins us on the show now. Hi, Parthiv. Good morning. Thanks a lot for joining us today. First up, let me just address the news which has just come by of merger of Indus Tower with Bharti Infratel. What have you made of this merger? Do you think this gives better room to Bharti Infratel for any sort of cash deployment which could improve the return ratios?
Good morning. Thank you for having me on the show. See, I think if we look at this merger, it is a fantastic conglomerate wherein it's a very good passive infrastructure for not only Bharti Infratel, Idea, Vodafone, the main promoters of this Indus Corp, but I think it's for the entire telecom industry, because I think as per the press release, they are talking about this is going to be non-discriminatory, wherein it will be beneficial to all the incumbent telecom carriers. And I think this is a massive infrastructure powerhouse, especially if you have to look in terms of the size. This is the world's biggest, barring the Chinese market, which have bigger companies. But I think generally we've seen in the tower business, whenever they have scale, they have good synergies in terms of different circles that they operate into. Because this combined entity with Bharti Infratel already owning a lot of assets, plus the Indus assets which is getting added on to, I think it adds to almost, in terms of the number of circles, 22 telecom circles. So this will not only be useful for the current 4G deployment, but even the 4G plus and the 5G technologies which are going to come ahead in time. So I think this is a fantastic move. In terms of what it impacts the stakeholders, I think Idea tends to monetize around $1 billion, which is very helpful to them for the current state of affairs in terms of how their balance sheet is. So I think it's definitely kind of a relief for a company like Idea. Bharti InfraTech, I think definitely the value enhancement will take place, but it'll be interesting to see whether the parent, Bharti Airtel, thinks of paring down their stake in this company going ahead in time, because that has been their strategy. They are also kind of laden with around almost 1 lakh crore worth of debt. So I think that'll be interesting to view. But overall, I believe this is very good news for Bharti InfraTech current shareholders. This will create a lot of synergy, and the tenancy ratio I think is quite good out here. And I think they can now do further capex and increase the capacity utilization of the existing towers.
Yeah, well, they have said in the press release that they're going to look out for a set of investors in order to pare down their stake as well. It'll be interesting to see what happens. But remember, this is not the only news that is coming in from the Bharti Airtel stable. They came out with numbers yesterday. Somit is here with a quick perspective of what the numbers were like and what our brokerage is saying. Somit.
So if you see the key numbers, they were in line with the estimates, and the revenue was down by around 3% to 19,634 crore rupees, while EBITDA declined by around 7% to 6,930, and margins came down to around 35.3. Now these were in line with the estimates, but the surprise came in the net profit front. The company came out with a net profit of close to 83 crore rupees, mainly on the back of a deferred tax credit that the company accounted for in the fourth quarter of financial year 2018. Now, deferred tax credit was close to 464 crore rupees, because of which the company was able to post a net profit of 83 crore rupees. Now, if you see you can clearly see here how the African business of the company has been paying off. Now, the net profit for the Africa business was around 699 crore rupees, which was at its all-time high, while that of its India business, which includes the wireless business and the DTH and the other enterprise business of Bharti Airtel, was down to around 652 crore rupees. And this was the first time that the India business has reported a loss in the last 15 years. Now, if you see the margin trend of Africa and India, you can clearly see a divergent trend here. The EBITDA margins of the African business has risen from 23% in the second quarter of financial year 2017 to 36%, which is at its all-time high, while that of the India wireless business has come down from 42% to 28% as of the fourth quarter of financial year 2018. Now, if you see the data consumption, which is a key theme for the telecom operators, it has increased for Bharti Airtel, but at a slower rate. Now, the data consumption for the fourth quarter of financial year 2018 was 6.6 GB, which increased at only 24% compared to the last quarter. Now, capital expenditure, which is a key to sustain in the Indian telecom market, has remained at an elevated level. The capital expenditure for the fourth quarter was close to 6,300 crore rupees, while for the entire financial year that is 2018, FY18, was more than 26,000 crore rupees for Bharti Airtel. Lastly, the leverage ratio. Now, the leverage ratio of Bharti Airtel, that is net debt to EBITDA, is at its all-time high of 3.23 times, while the company's net debt is more than 95,000 crore rupees as of 31st March 2018. Now, the company will hold its conference call today, and investors will be keenly watching out for any commentary related to the capex plan of Bharti Airtel in FY19, how they are going to fund it, what will be the leverage ratio, along with that update on the completion of the recent acquisitions that the company has made, and further stake sale in the tower arm. And this will be more important because Infratel and Indus will now be merged, and also stake sale in the DTH business will be a key thing to watch out for. Also, management commentary on the outlook of the Africa business and the impact of Jio's aggressive pricing will be a key thing to watch out for in the conference call.
Interesting. Thanks a lot for that, Somit. So that's Bharti Airtel. Actually, just a follow-up question. I have a bunch of other stocks to monitor today, Parthiv, but a quick one on Bharti Airtel as well. Did the performance surprise you?
See, Neeraj, I think one thing tells me that there is a EBIT loss in the Indian wireless operations, but there's a subscriber growth. Tells us just one thing: they're right now in defending mode. They just want to make sure that they can try their best to kind of make sure that there's no much subscriber attrition from the predatory pricing from Jio, and yet try and gain some subscribers, despite the fact that the ARPU has gone down from levels of 196 rupees, which was in Q1 FY17, and it has come down to 116. So goes to show that right now they're in the defending mode. it's a very tricky situation, but I believe that as and when Jio also to justify the ROI will have to rationalize their pricing, and whenever that happens, incumbents like Bharti, which are maintaining their market share or even trying to get more subscribers, will definitely be beneficiary. Plus, luckily, the African business is playing a good kind of sport in terms of helping the overall business in the consolidated levels. So yes, I think Bharti Airtel, in terms of if any sort of declines from here, 5 to 10% due to results or due to such competitive intensity, I think I would be buyer in this stock for a pure telecom carrier.
Okay, we'll be watching out for the opening of Bharti Airtel post its numbers in today's trading session. But remember, besides Bharti Airtel, where the ARPUs have been suppressed because of the pricing pressure which prevails in the industry, there are a whole host of other earnings which will be coming out today. And we'll get to our research team to find out what are the expectations from key earnings today from the likes of UltraTech and Wipro and some other stocks in news. Well, good morning to three of you. Let me start off with you, Agam. Wipro comes out with its earnings today. Is it going to surprise like TCS?
Well, I'm not certain about that, Navneet, because we're not expecting any fireworks from Wipro. If you consider the IT services revenues expectations, we're expecting an uptick of around 2%. We can expect a considerable expansion in margins of well over 16%, as well as consequently profits could move up as much as 10%. But the reason behind this expansion in profitability is because of the fact that the company had provided for 317 crores on account of one of its clients' insolvency in the third quarter. That's the reason why we could see profitability numbers looking inflated. But other than that, with respect to the guidance, we're expecting a negative 0.5% to positive 2%, and this is because it's a seasonally weak quarter. The first quarter of the financial year is seasonally weak for Wipro specifically. We will be watching out for what the company has in mind with respect to its plans on the digital services, as well as the outlook for BFS and the energy verticals. And of course, we're also keeping an eye on what they intend to do with respect to infrastructure management, as well as business process solutions. But on the whole, we're expecting a tepid quarter for Wipro today, this time.
Okay, tepid quarter from Wipro. And I guess this is the IT company which has been underperforming with regard to stock price movement that we've seen in the last few sessions. But beside that, cement major UltraTech will be coming out with its numbers. I remember ACC numbers were pretty strong on the operating front. What are we expecting from UltraTech?
Well, we're not a good quarter expected out of UltraTech Cement. In fact, we're expecting a margin contraction for UltraTech Cement. To give you a basic rundown, we're expecting a net sales growth of around 30% year-on-year basis to a number of around 8,500. EBITDA is seen up by 15% for this company, but then the margins are seen contracting at 17.2% as compared to 19.4% that we've seen in the corresponding quarter. Also, profitability, that's expected to come down by as much as 22% on account of higher depreciation and finance costs due to the newly acquired or the acquired JP assets. In terms of the key parameters that we'll be keeping an eye out will be volume growth, which is expected to be a 24% year-on-year growth figure to a number of 17.5 million ton as compared to 14.1 million ton that we've seen in the corresponding quarter. EBITDA per ton, that's seen down by as much as 8% to a number of 839. That's account of higher power, fuel and freight cost, and realization per ton, however, is seen up by 4.2% to a number of 4,882. The things that we also would like to keep an eye out on, besides the volume, will be a demand and pricing scenario given the depressed price trend that we've seen for cement prices.
So the key numbers to be watched out will be the realization, volume growth and EBITDA per ton, right?
Got that right.
And anything else you're tracking for today, Nikki?
So three news, not many, actually three counters that I'm tracking today. The first one is Hero MotoCorp, where the company has raised the two-wheeler prices by as much as up to 625 on back of higher input cost pressure. Also, we have Gokuldas Exports, which has the board of directors of the company have approved a QIP issue at a floor price of around 90 per share, which implies a 4 to 5% discount as compared to the current market price that we saw yesterday. Third in our list is also ICICI Lombard, where the race to buy Star Health Insurance Company just gets intense, given that Westbridge Capital and Jhunjhunwala, which had partnered to buy in Star Health Insurance, will now actually match up to ICICI Lombard rupees 6,500 crore offer price.
Thanks for that. that. We'll be watching out for all those companies when the market opens. But Jay, some earnings came out post-market as and some key important bulk deals as well.
That's right, Navneet. Let me start off with the weak set of numbers which were posted by IDFC Bank, where the net interest income went down 10% at about 453 crores, while the profit also declined about 76% at about 42 crores on a year-on-year basis. However, the provisions more than doubled at about 242 crores on a quarter-on-quarter basis, and the asset quality improved to about 3.31% as compared to 5.6% in the previous quarter. In terms of the other results that we are tracking is Oberoi Realty. Strong set of result numbers, however, below estimates, if I may say. Revenue was up about 19% at 345 crore, while the profit went up 40% at about 143 crores. The EBITDA actually surged about 22% at 184 crores, while the margins expanded to about 53.3% as compared to 52.1%. Now, all of these parameters were largely below the estimate number that we had. So, for example, margins were expected to be about, more than 60%. However, we clocked only 53%. So, and given that the stock has actually run up in the last few days, will be very interesting to see how the stock actually reacts to these results. Lastly, we have Raymond, which also posted a strong set of numbers, while the revenue went up 11% at 1630 crores. The net profit surged about 61% at 53 crores. The EBITDA was up about 32% at 150 crores, while the margins came in at about 9.3% as compared to 7.7% on a year-on-year basis. However, the big news for Raymond was that the board has approved, development of land in Thane to the tune of about 300 crores, and the land spreads across 20 acres in Thane, Mumbai. In terms of the bulk deals, Navneet, very interesting ones that we've picked up. First one is the advanced enzymes. Now, HDFC Mutual Fund has actually bought in about 2% stake, while the promoter has sold 2% stake in the company. Now, important to note that promoter holding as of the March quarter stood at about 71.3%, but also that, in the last 4 quarters, the promoter had actually upped his stake to the tune of about 2.5%, and the stock in the last 1 year has given you negative return of about 43%. So, interesting to see why the promoter would have sold over there. Lastly, we have Hathway Cable, where CLSA Global Markets has sold about 3% stake at price of about 35.99 each. Also remember that CLSA Global held about 9.55% stake as of March quarter, so that will be reduced to about 6.5% as of with yesterday's bulk deal.
Well, a whole host of names to keep an eye on. Thank you so much, all three of you. I'm going to take forward Raymond. Parthiv, if you're tracking this counter, let's see how the stock reacts. The earning was definitely strong, like we've seen a good FY18 from Raymond, but the big news that everybody's been waiting for, developing that Thane land. Interestingly, in the press release, they've mentioned to develop that land for residential purpose, they'll have to invest 300 crore for FY19, which also means that they could be investing more money in subsequent financial year. How are you viewing this news, and how do you expect the stock to react to this one?
See, frankly, Navneet, I think whenever these companies talk about things like land development, which is not their core, I think, yes, it's just that they own that land bank, they have that asset, they want to monetize it. It's not like they're selling the land as is, how is, getting the cash, putting in the company, using it for the core operations. So, not a big fan of, companies talking about kind of monetizing their land bank via development, wherein the company will have to put in a lot of money. And plus, I think we know how the real estate market has been panning out. There is certainly a lack of pricing power despite even the project being of good quality. So, in such a scenario, I think I would not give a lot of weightage. But yes, I think the point to which I would give a lot of weightage is the core business. I think we are seeing new energy in terms of how the management is treating this company and trying to create value for the shareholders. Especially, I think if you look into what type of cost-cutting measures they have taken in the past, they are looking at enhancing the margin levels, which have been abysmally low. Because if I were to compare Raymond with many other textile players, say names like Arvind has created substantial value thanks to the Arvind lifestyle business and the value add that they're focusing on. So I think maybe on a similar trajectory, but at the current price and current valuations, I feel that Raymond is very richly valued. So I would not like to take a buy call out here, but I would wait for the stock to cool off. On any sort of corrections, we would again reconsider it.
Interesting. I almost almost entirely agree with what Parthiv is saying, save for maybe one odd difference out here. One, the fact that the stock has gone up quite a bit. You heard, though, Gautam Singhania speak in that interview with Minka as well about the kind of brand building that he wants to do with some of the other niche brands that exist within the Raymond stable as well. That is one. Two, about this land development, I mean, this is something that a bunch of shareholders have wanted for a really long time, that Raymond should do something about the land parcel that they have. The timing, the reason why I call the timing is interesting is because the Thane belt now is seeing a clutch of developments happening. Oberoi has bought a large land, the Glaxo land in Thane. They are going to be developing that. I've seen a clutch of other more local, large Mumbai-based real estate developers upping their ante in the Thane region. If there was ever a time to do that, probably the time is now. 5 years later would be a tad bit too late. The second question would be, what if Raymond partners with somebody else to do the development because they are the landowners? And I think there, if you see, most of the builders who are doing these deals are doing it because they know that there is a lot of benefit in it for them. Godrej Properties, the whole model over the last couple of years has been to enter into a JD, wherein they don't invest anything upfront. The landowner has the land, and then they take a 50% share, which is great ROI for a builder. I think Raymond probably believes, I don't know, rightly or wrongly, time will tell, that they don't want to give away that cream to a developer as well, and maybe want to take the cream themselves as well, because they've sat on this land for a really long time.
Really long time.
Really long time. To now give away the land and a 50% or a 40%, whatever that share would be, to a developer, maybe they don't want to do that.
I think the key details which were missing were whether it's going to be a joint development and
maybe
300 crores, which they are looking to invest.
Which is why I think that it's not a JD. Which is why I think that they are probably looking to do this when they'll hire a contractor and do it, etc.
But how will this news be absorbed by the shareholders if 300 crore is actually removed from the company to develop that land? I think that remains a key question which only the management can answer.
Yeah, but 20 acres in Thane, but you would presume that the returns, if they develop it well, could well be amazing. But Parthiv's point is well taken. You don't know how successful they will be in doing this because their core expertise is not this.
True.
Let's wait and watch. However, 8:48, we've actually gone slightly over on the time wherein we get in our technical experts and derivative experts on board. So let's really get to that. Gaurav Bissa, Assistant Vice President at LKP, as well as Chandan Taparia from Motilal Oswal. Both of them join us on this day every single week. Gentlemen, thanks once again for taking the time out and being with us. Gaurav, let's start off with you. You were bullish when we spoke to you on Monday. Today, due to a lot of other reasons, we are likely to start off slightly lower. How does this place us for a play on the expiry? Okay, Chandan, let me pose the same question to you. Considering that while VIX has fallen off, we didn't see too much of a build-up on the index yesterday as well, but likely to start off 0.5% lower. How does this place us for an expiry play?
Yes, first looking at the market setup as per the derivatives database, we have seen decline in volatility by 9.44% and volatility has gone below 12 levels. So falling volatility clearly indicates that some sort of stability would be there in the market and decline is being bought. Same time, put call ratio is hovering above 1.60. So rising put call ratio with falling volatility also indicates the positive implication or the bullish implication for the market. Now looking at the option setup as we are heading towards the expiry, we have seen maximum put open interest at 10,500 and fresh put writing to the tune of around 6 lakhs as seen in 10,600. So that indicates that 10,520, 550 is likely to act as a support. So even if the market opens negative, then I'll continue to be with bullish bias with support of 10,520 and expecting market to again move towards 10,630, 10,660 kind of level. If I look at the entire expiry setup, in this expiry the Nifty is up by around 5%. And continuously making higher highs, higher lows from last 4 to 5 weeks. And if you look at the volume weightage average of the week, that comes near to 10,435 and market is trading around 150, 170 points higher than the volume weightage average. So that clearly indicates that bulls are having upper hand in the market in this expiry. So that's why even if it declines up, that again will be bought in the market as per the option data indicates. So as of now, till it holds above the support zone, I'll continue to be with bullish bias with support of 10,520 and I'll play for an up move towards 10,630, 10,666 kind of level.
Okay, that's the view coming in on Nifty for expiry from Chandan. Remember, he's expecting the expiry to take place in that range of 10,600 to 10,650 and he suggested a ladder spread on that, which is being flashed on the screen. But Chandan, in terms of individual stocks, what are the stocks that you'll watch out in today's session?
Yeah, again, as you mentioned about the ladder, as we are expecting market to remain up with support, but not expecting move beyond 10,666. So that is the reason that I am suggesting to be with ladder by 10,550 call, sell 10,600 and 650 call, pay premium of 10 rupees and have for 40 points up move. Now talking about the stock specific, earlier the market or especially the Nifty was moving with the support of selective IT, FMCG and metal counter, and now I feel that heavyweights from the different sector are likely to take a lead to control on the Nifty index, and that's why we have positive view on the SDFC Limited, Reliance, L&T, but here I have taken the different call as per the price pattern. So first that is buy on SDFC Limited. This stock has been gradually shifting its support to higher zone. It also respected to its 50-day exponential moving average. It witnessed buying after the decline of last 4 trading session and respecting to support trend line as well. So positive price setup indicates an up move towards 1920. One can buy with a stop loss of 1832 level. Second trade, that is the Bajaj Auto. This stock has seen the reversal and consolidation breakout of last 4 to 5 weeks. It managed to surpass immediate hurdle of 2850 and holding well with jump in the trading and the open interest activity. So positive price pattern with data indicates an up move. Risk reward ratio is quite favorable. So recommending to buy with a stop loss of 2830 and looking for an up move towards 2980 level. Third trade, that is on the McDowell. After the consolidation of last 5 to 6 trading session, it has taken support at its rising support trend line. We have seen some put writing activity. Mechanical indicator like RSI and MACD also going to the upper side above 60 mark. So that also forming a positive price pattern. It has formed pole and flake pattern, that is the bullish pattern as per the technical is concerned. So all these reason indicates the positive move. One can buy with a stop loss of 3500 and the stock like United Spirit has potential to move towards 3690 to 3700 levels.
Interesting. Now before we get in Gaurav Bissa with his Nifty opinion and stock specific opinion, let's get in a quick word from Jayesh Khilnani in on our special segment Bloomberg Edge. Jayesh, what's the stock on the radar today?
Morning, Neeraj. I'm watching out for Just Dial. That is because as of yesterday's close, it has in fact breached the 50 and the 200-day moving average and closed below that. And also the moving average convergence divergence indicator has turned negative, thereby giving it a sell signal. Let's have a look at how the MACD actually works. It's a momentum indicator which shows you the relationship between two moving averages of 26 period and 12 period on an exponential basis. It also helps you to identify where the turning point in a particular trend is. And Just Dial has been largely flat, so we can expect negative, as per the MACD indicator. What it actually does is plots two line, which is the MACD line and the signal line. And also, how do you interpret that is when the MACD line crosses above the signal line, that's where you buy, while you sell when the MACD line crosses below the signal line. And that is exactly what has happened on the chart of Just Dial. Now you can see that last 6 months the stock has been quite volatile, but since Jan it has been range bound, very close to the 450-500 mark. But as of yesterday's close, if we can zoom into this, you can see that the blue line, which is the MACD line, has crossed below the white line, which is the signal line. And also, all of this has happened below the zero reference line as well, which gives it a strong sell signal.
Okay, we'll watch out for this, Jayesh. Thanks for putting that into perspective. Gaurav, we lost the link with you earlier. Parthiv, we get you to stay on, so much more to talk about. But Gaurav, to you first. We lost the link earlier. What's your index strategy for the day today or for the next couple of days? And what are your stock recommendations for the day today?
Good morning. The index strategy is buy on dips, and if you look at Bank Nifty, that gives a more clearer picture for the reason that we have seen 24,900, 950 acting as a good support zone. If Bank Nifty has bounced back a couple of times from these levels. If you look at the option chain, 25,000 put option has seen good amount of writing. It has a good concentration. As long as we are trading about 25,000 level, there is a possibility we may head towards 25,250 towards expiry. On that premise, I would recommend buying 25,300 call option, but I would not buy of the current series. I would probably go for 3rd May, the weekly expiry of 3rd May. Buy around 70-75 rupees for tires of 110 with a stop loss of 55. For the individual recommendation, the first recommendation would be on GAIL. There has been net addition of 3 lakh shares yesterday on yesterday's trade. It has come out of a channel. It's also giving a small breakout on daily charts. Writing was seen in 340 call option. It has not yet closed above 340. Once it sustains and closes above 340, we can expect 7% up move kind of coming in. There's already been good correction coming in the name. So there's a good possibility, good probability that when next trading session, we can see a good spike coming in GAIL. One can buy GAIL futures, have a stop loss of 334. Immediate targets would be 345. Second recommendation would be sell on IndianOpen futures. We have seen all the IT names seeing tremendous action, but kind of move, ferocious move that we have seen, like similar kind of move has not been seen in open interest. There has been unwinding that has started. One can have a stop loss of 1010, 1012 and sell IndianOpen futures for targets of 975.
Interesting, a sell call on a mid-cap IT name. Gaurav, Bissa, thanks. We'll monitor this for sure today. Parthiv, a quick thought on Persistent Systems. The numbers, they were anticipated to be weak. They've delivered a weak quarter. I thought the margins selectively, as per some brokerages, were better than expected. Though as per the Bloomberg estimates, the margins too missed estimates. What is your thought here on the results, and what should one do with the stock?
In terms of purely, first, if I were to talk on valuations as compared to its peers like say Mindtree, Persistent System is currently quoting cheaper, and yes, I think they had warned in advance in terms of one of the IP related issues which had resulted in this quarter being weak. But if I were to look in terms of the forward guidance, in terms of how this company can do in FY19, we are confident of a double-digit revenue growth, and also the margins would, I think, come in place. And most importantly, the strategic alliance that they have with IBM, I think that should bear a lot of fruits in FY19-20. So I think we have a lot of confidence in the ability of Persistence management, and purely because all the mid-cap ITs, I think they have rallied a lot, 40-50% from their lows, and that too in a very short span of time. Vis-a-vis Persistent Systems relatively has underperformed. So I think all these reasons makes me feel that Persistent Systems on any decline because of this result, if at all it were to happen today in the course of time, be a fantastic buy, and one should hold on to this story for the next 2 to 3 years.
Okay, that's the view coming in on Persistent. Remember, the brokerages do have a divergent view. In this one, you have Credit Suisse, where they've maintained their rating of outperform. They do believe that in FY19, Persistent will be able to post a double-digit growth. But if you look at Citi, they have a sell rating on this one with a target price of nearly 665. We'll definitely watch out for this one when the market opens. It will be reacting to its earnings. But let's quickly do a technical check. Chandan, on the charts, how is Persistent looking?
Yes, we have seen momentum in most of the IT counter, and that's why this stock also recovered well from lower levels. It has seen the rally from 670 to almost 780 kind of level, and then witnessed some pause in the positive momentum on last trading session. But recent bottom out again will find supported decline. So if it comes near to 710, 700 zone, then one can again go with the long position for an up move to a 760, 780 kind of levels.
Interesting. We're just about getting ready for the pre-open rates to kick-start. The other interesting one, Navneet, could well be IDFC Bank as well.
Yep.
Forever being the promiser, not being able to deliver. However, the market believes that with this whole merger and Vaidyanathan now being at the helm of the company, eventually in the merged entity, can things change for an IDFC Bank shareholder? My question to Parthiv or to you or anybody else would be that if that's the case, why should I go out and buy an IDFC Bank share right now? Is the merger ratio also in favor? I mean, all of those calculations, if you ever want to do it, really. But let's wait and watch.
I think the asset quality saw marginal improvement for this quarter, but overall the numbers definitely were on the weaker side. So we'll be watching out for that one. Besides that, certainly Oberoi Realty is the other one that we'll watch out for. Remember, on Monday, the stock had rallied nearly 12 to 13% in trade. Finally, the numbers are out, and they have been on a stronger side for the last few quarters. And those are the Asian market indices on your screen. Clearly, we're looking at a negative start, but in the last few days, Neeraj, surprisingly, we've not been taking cues from SGX Nifty at all. So let's see if we actually have that gap down opening of nearly 46 points. We'll get the initial pre-opening rates on the screen, which will settle down in a while. As of now, the pre-opening rates are suggesting Nifty is in the positive territory with gains of nearly 20 to 25 points. Those rates will settle down. But most importantly, let's do some stock checks. Pull up Bharti Airtel. That's going to be the one which will react to its numbers today. And well, it's showing a positive. Remember, besides the numbers, there's also news of Bharti Infratel as well as Indus Tower merger, which came this morning. So watch out for Bharti Infratel too today, and watch out for stocks like ICICI Prudential and SBI Life. Remember, in the last 1 hour of trade yesterday, post the numbers of ICICI Prudential had come about. Good set of numbers, at least the brokerages are bullish. They had rallied a lot. So ICICI Prudential just showing a flat tick in the morning session. SBI also rallied on back of that news. Couple of other earnings. Oberoi Realty, pull up that one. That too will react to its numbers today. Oberoi is showing just a flat tick so far. So pre-opening rates, Neeraj, right now at least everything looks positive.
Yeah, doesn't look too bad. Interestingly, some big moves in DB Realty notwithstanding. Raymond, we mentioned, could be a star that is up and active. Idea Cellular, by the way, on a potential beneficiary, if you can count it that way, though I don't think it'll have a 10% move. I would presume a couple of percentage points at best. Let's wait and watch if that indeed happens or no. That aside, Shrey Infra, again, yeah, so all of those companies that past, present, future linked to Indus Stars, in a manner of speaking, are reacting today. Gati had a big move in trade yesterday, and that is looking like starting off on a good note, though now the rates seem to be stabilizing a bit. ICICI Pru too had a freak 7% uptick in the first few minutes of trade. So let's give these rates a chance to stabilize before we really talk more about these. Also watch out for Persistent Systems and IDFC Bank, the two newsmakers in the manner of speaking. Persistent has recovered a bit from those hits that it took when it came out with the warning. So even though the numbers are in line with what was estimated, you may not be surprised if there is a bit of a move either direction. And IDFC Bank, that came out with numbers which optically looked weak, though as Naveen said, asset quality marginally better. Let's wait and watch. Finally, the yields and the currency, both of these should also be monitored. Let's bring up the 10-year yield and then the rupee as well. 7.70, so no big shakes out here on the 10-year yield, despite the 3% mark being breached in the US. And bring up the currency as well. I don't think there is too much of a deviation. Oh no, actually there is. There's about a 15 paise weakness in the rupee vis-a-vis the dollar, 66.54 now. So this is not looking prettiest. Okay, Parthiv, I first want to get your view on the life insurance companies. Extremely strong moves yesterday, and maybe with reason. ICICI Pru, the numbers really good. A lot of views have come out about how the 30-35% discount that the stock trades to HDFC Life should narrow a bit. Now my question to you is, would you believe that that would happen? And if that is the case, is ICICI Pru the best bet amongst the three listed names, or would you go in for HDFC or SBI Life?
See, frankly, Neeraj, yes, no doubt the performance was very good in terms of this parameter, which is value of new business percentage margins, which enhanced to around 16.5% versus around 10.5%. That's mainly because of two reasons. One is cost cutting and the right product mix, which is more of the protection business that they're selling. So I think still, if we were to compare ICICI, no doubt it is quoting a 25-30% valuation discount in terms of the embedded value, price to embedded value. HDFC Life still, according to me, would be my most preferred pick. Only reason being, look at their margins. They've improved their margins from already very high margin levels. They're almost at 23.5%. So still, if I were to compare HDFC Life with the peers like SBI Life or for that matter ICICI, there's a huge margin gap. And plus, I think in terms of the persistency ratio improvement, even HDFC Life has shown fantastic improvement. I somehow feel insurance business is a lot linked to how the brand perception is. And HDFC, in terms of whether it's a banking business, NBFC business, I'm quite confident over the next 3-5 years, won't really disappoint shareholders, even in the life insurance business. So I think despite that higher, at least 1.5 bips higher the EV by embedded value valuations, I still believe that HDFC Life is a more preferred bet than ICICI.
Okay, interesting. By the way, Zensar Tech looks like starting off on a negative note. We don't know it will be a 7% downtick or no, but certainly. Okay, no. So as I said, I think these rates are just changing too fast, too furious. On my screen, it was just showing a 7% downtick. I think it'll change for a bit. How about the positions and the charts? Chandan, if I can come to you, the life insurance companies and the way they've moved, is there a trade in any of the three?
Yes, positive on the SBI Life. Yesterday only it has given the breakout from its pole and flag pattern on the lower degree and the daily scale. It has surpassed the multiple hurdle of 725, which was acting from last 4 to 5 trading session. So now 725 is likely to act as a support, and it has potential to move towards 777 kind of level. And I think it has gone to the new lifetime high territory. It has surpassed the 740 kind of zone, which was the high made in month of listing. So I think next leg of rally is going to start in the counter, and potential target may come near to 840, 850 if someone is looking for 2 months to 3 months kind of origin.
Well, the other stock which has been very active in the last few sessions is the Max Financial also. I remember yesterday that went up for the 6th straight trading session. Today in the pre-opening rate, just about showing an uptick of ₹1. Gaurav, on the charts, Max Financial, if somebody had taken long positions, what should be the target? Should they continue to hold on their position?
I think they should hold on to their positions. One can have a stop loss of 510, very down from the current market price. On the upside, if 530 is taken out, further upsides of 545, it cannot be ruled out. Trend is quite strong. We are not yet seeing a heavy unwinding. There's a possibility it may continue in the uptrend. One can have a stop loss of 510 and hold on to the name.
Okay, those are the targets laid down by Gaurav Bissa on Max Financial. But the other space, Neeraj was highlighting the logistics stocks were doing pretty well. Parthiv, before we let you go, just wanted your view on the logistics space as well. Gati was up, and obviously we know why. Tomorrow is a board meeting. They're looking to induct a new strategic partner. But something like Snowman Logistics, that also went up in trade. Any view here?
Only two things. One is the infrastructure status to the logistics sector, plus the GST tailwinds that we know that is going to be a very important vital role for these companies. I think definitely in terms of the stocks that we like, I think there are two good companies. One is Future Supply, which is I think I believe that they're going to come out with results maybe today, tomorrow, and we are expecting good set of numbers. They have good strategy, reasonably good margins, and good return ratios. It's not a very asset heavy type of a business model. And the second company that we like is Mahindra Logistics. Yes, here we would love to see the company scaling up their margins, but again, a fantastic business model, and they are also looking at a lot of business coming out besides their parent, which is M&M. So automobile sector is buzzing, and these two companies do cater some part of their business over there. So I think these are the two companies in the logistics space that we like for the long run.
Okay. Parthiv, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Have a great day ahead. Have a great week ahead. Incidentally, it promises to be a busy trading week. The pre-open rates have settled. We are likely to start off not too bad, actually. If I look at what the pre-open rates seem to be settling down, yet another day when the SGX Nifty's failed to be the correct lead indicator. It did indicate that we'll start off lower, but this is just marginally lower. Not as bad as what the Dow movements yesterday as well was suggesting. There's some bit of strength that is existing. Don't know how long it'll last, but for now, it seems to be lasting. Chakri Lokapriya of TCG joins us right now on the show. Chakri, this inherent strength the last few days, dips are being bought into, and we don't have too many ferocious dips, even if the global markets are a bit awry. What's happening here? What have you been doing?
Good morning. Yes, I think for the first time we're seeing actually a recovery in the industrial space, which has been the big theme that infra at some point will pick up. Capacity utilizations have improved at the highest levels in the last 4 years. Operating margins are beginning to increase. Now it's a question of the order flow continuing to translate into revenue for the company. So given the fact that you'll end up this year, FY18, Nifty earnings growth is hardly going to be about 5%. So the big thing is going to be the next year where this earnings growth is expected. So here you're seeing actual improvements. So I think from that perspective, you're beginning to see actual green shoots emerging from an Indian perspective.
Interesting. And then showing in the way the markets have been reacting for sure. As the 8 minutes have wound down, and Chakri, stay on, so much more to talk about. I just talk about a few trades here, the stocks which are active in the pre-open session, and we'll do that post-market opening as well. Indiabulls Ventures continues to rise and shine, but the big winner could well be Raymond and the Nifty 500. This is starting off as the top gainer. In fact, it's all newsmakers. Raymond, Bharti Infratel, ICICI Prudential, the top 3 gainers in the pre-open session on the NSE 500. Chandan, any thoughts on Raymond?
Talking about the textile counter, we are closely tracking Arvind, but looking at the price pattern of Raymond, it seems that it's likely to start the fresh up move. Again, it is also forming the pole and flake pattern, and what I noticed that most of the counter are forming the pole and flake pattern, and then starting the next leg of move, and usually we see the movement of 4 to 5%. So similar kind of formation is being observed here. Hold about 1080 may start the next leg, which may take it to 1140, 1150. So quite aggressive 5 to 7% target on higher side.
For viewers who are tuning in right now, remember the big news that broke out at 8 was the Industar deal approval by Bharti Airtel, and that's led to Bharti Infratel moving up about 2.25% or 2.75%. So 2.25% to 3%, 338. News is positive. All our guests who've come in the past have already spoken about how they view it as a positive for Bharti Infratel, and it's showing in the stock. It's about as I said, 2.7% higher. From a trade perspective, though, Gaurav, Bissa, Bharti Infratel at 338, and just looking at the last 3 or 4 sessions move, what would you do here if you would do anything at all?
I think it is best avoided. It has been trading in a narrow range, and I think that is going to be the case for next 2 trading sessions. I would be a buyer only about 347, 348, in which case it will come out of the consolidation phase, then it can head towards levels of 365, 370, the next immediate hurdle for the name. At these levels, I think it's going to take some more consolidation, and I would not be too interested.
Well, some earnings reaction you'll get to see. Pull up DCM Shriram. That's your top loser as we speak on the Nifty 500 index. The numbers came out post-market hours yesterday, where the EBITDA was down nearly 62%. And look at the pre-opening rates. It's showing a downtick of nearly 9%. The other loser in trade could be Zensar Technologies, which will also react to its earnings. If you look at the margins, there was some bit of contraction seen, which came in at about 10.2%. So Zensar too, in the opening session, is showing a downtick of nearly 1.5%. Quickly, a word on DCM Shriram, Chandan, on the charts.
We don't have coverage, but yes, looking at the chart, it looks quite weak. Formed the rounding toe formation, expecting a decline, which may probably take it to 410 and then 385 kind of levels.
Okay, that's the view coming in on DCM Shriram, which is likely to open lower. Raymond is showing an uptick definitely in today's session. India Bulls Ventures was locked in upper circuit yesterday. That continues to do well. Chandan, what about the aluminium makers yesterday? Hindalco, Vedanta, Nalco, all of them saw substantial cuts post the news of crashing of aluminium prices on LME was known. If somebody is carrying on their short position from yesterday, what should be the target price?
See, looking at the metal or aluminium, we have seen the surge in the volatility, or in fact, the IV of particular counter has increased by 5 to 7% from their recent previous volatility. So some bit of the selling pressure could continue. We have seen pause in the positive momentum. And Hindalco, which rallied towards 267, has again gone back to 235 kind of level. It formed an island reversal, and that is also negative island reversal by falling below 250 level. So now till it doesn't surpass its 245, 250 zone, the stock has potential to go down towards 225, 220. So negative price pattern is being formed, and that is a cause of concern, and stock already is corrected sharply. So I'll avoid taking any long position as of now. Those who are holding short, I can tell them to carry their position, and those who are holding and don't want to exit, I suggest them to hedge the position by buying 230 put. Now talking about the Nalco and other aluminium or metal counter, Nalco also seen the positive breakout, but again retested the support trend line. It is just near to major support. 75 is the support where earlier it has seen the breakout, and now if 75 is broken, then I'll suggest to exit the long position if someone is holding and continue to be with the negativity of the counter.
Okay, just a minute to go for market to open. Let's get a top trading call from both our experts. Gaurav, over to you first. One top call for the day.
It would be GAIL. As I mentioned, the amount of breakout is on the cards. One can have a stop of 34 on the upside, 345 to 10%.
It's a positive call on GAIL. Chandan, what about you?
Positive on the Bajaj Auto and McDowell. I'll mention McDowell because it has exactly taken support at its rising trend line and formed a positive pole and flag pattern. So looking for an aggressive move towards 1360.90, one can buy with a stop loss of 3500 plus level.
Well, that's interesting. Thanks, Gaurav and Chandan. Maybe stay on if we'll take in one final thought from you post-market open. But yeah, I can understand why Chandan is bullish on United Spirits. That space looked very, very active in trade yesterday. United Spirits made a small announcement, really, but notwithstanding, I think the entire clutch of stocks went up. The question mark only is, on a day when it looks like the subdued, what happens to the best performers of trade yesterday? The United Spirits, the ICICI Pros of the world. Let's wait and watch. Starting off absolutely flat to the Nifty Bank, about 0.25% lower. Let's see if that has an impact. 1/3% now. Maybe an index to monitor, the Nifty Bank. The mid caps and the small caps should come up on your screen. I would presume they have a flat start. Yes, it's absolutely a flat start. This is not an indication of what will happen for the rest of the day, but he's starting off on a flattish note. Now about 0.25% lower for the Nifty and about 0.5% for the Nifty Bank as well. The heat map. Well, fair bit of red. Not enough losers. The top loser is Cipla, which is down less than 1%. Not enough gainers, but for the Bharti twins. So Bharti Airtel, Bharti Infra, about 1% higher. BPCL, marginally higher in trade, but we don't have too much of a movement save for all marketing companies and the Bharti twins. Reliance, which was up about 4% in trade yesterday. Well, funnily, we missed out talking about Reliance on a trading side today, but that's about a 0.5% higher as well. But aside of that, no big gainers or losers. So let me quickly jump to the top newsmakers and some of the key movers in trade yesterday and some result boys as well. Those would be interesting. Firstly, the stocks that did really well in trade yesterday, a late surge of sorts. ICICI Pru, HDFC Life and SBI Life. And ICICI Pru certainly seems to be in a hurry to narrow the discount, the valuation discount between itself and HDFC Life. That's about a 35 rupee move in the last, an hour, less than an hour really, combined today and yesterday. It's a 35 rupee move. That's a fairly strong move for ICICI Pru, so that's doing okay for itself. Raymond should come up on your screen. I think that's the big news maker, and that starts off about 3.5% higher, so 1101. Not bad news. Don't know if it'll last or no, but for now, in the opening trade, it is doing reasonably okay for itself. It's got nothing to do with results, really. All about the land development. And fairly weak quarter for IDFC Bank and Persistent Systems. So I think the reason why Persistent is doing well, because despite the fall in IP revenues, the margin performance was slightly better than what some of the brokerages were anticipating. There's some bit of buying out there. Let's see, the commentary from management would be important. Can FY19 turn around things for Persistent Systems compared to the weak Q4? I think that could be the one reason. 4% higher now for Persistent. That's certainly revving up in trade. Navneet, what are you spotting?
Well, Neeraj, definitely the start has been pretty weak. Let's just pull up the mid-cap indices. They too have started on a negative note this morning. And let's see how much are the cuts as of now that we speak. Mid-cap index is down only about 35 points as of now. But let's look at a couple of stocks which are reacting to the numbers. Pull up DCM Shriram. At least it was showing a 9% downtick in the pre-opening rates. The numbers were not good. The operating performance was bad. DCM Shriram actually is down nearly 10% in trade. Something like GIC Housing Finance and IDFC Bank, both of them posted the numbers. They came in post-market hours. For GIC, top line was up 11%. That's showing an uptick of 2.5%. IDFC Bank, the numbers don't look good at all, but marginal improvement sequentially in terms of asset quality was seen. And let's pull up interesting stock like Oberoi Realty, which surged on Monday's session at least. That had a sharp surge. So post the numbers, a flat opening. Looks like that there could be some bit of profit booking which is being seen for this counter. Some stocks in news I want to pull up. Hero MotoCorp, the company which has raised two-wheeler prices by almost 625 rupees to offset the rising input cost. That's also showing a very, very flat opening. And Gokuldas Exports, the company's board has approved opening of QIP at a floor price of 90 and the current price is 97. So that's showing an uptick of nearly 2 to 2.5%. And Advanced Enzyme, that was a very interesting block deal which took place where the promoters actually sold stake to HDFC Mutual Fund, which bought nearly 2% stake in yesterday's trade. Advanced Enzyme is showing an uptick of 3% after gaining 5% in yesterday's session.
Yeah, interesting move there. Just opening thoughts from our experts before we move the conversation back with Chakri, and final thoughts from both Chandan and Gaurav. Gaurav, I'll come to you first. A word, anything that is popping up on your screen, either the index or something else, but just one more word on Reliance Industries as well, the move that started yesterday and continuing in today's session.
Reliance has given a good breakout. We have seen good amount of long positions also getting built. We had recommended to our clients yesterday. If it sustains the current levels, 1020, 1025, in next few trading sessions cannot be ruled out. That is one name that is on our radar as well. And apart from that, MCX is another name. Put on to 790, 792. I think 835, 840 can be seen. Something buy about 794, have a support of 780, 773, 794. On the upside, 830, 835 can be seen.
Interesting. Thanks, Gaurav, for that. Well, Motilal Oswal was bullish as a house on MCX. They've been today's note on Persistent has been strong as well. Chandan, anything that pops up on your screen, and a word on Persistent Systems, if you've looked at it at all and if you have a thought here.
Yeah, Nifty, I'll continue to be bullish. McDowell, I'll continue to trade for the day, expecting strong momentum in the built-up in the counter. Talking about the MCX, we are positive, and just a couple of days back we have taken the same in our product for looking 10 to 15% up in next coming trading session. Talking about the Persistent, already we have discussed that any small decline is buying opportunity, and upside the stock is potential to move to a 780 kind of level. Talking about the market, 10,560, 550 is the zone where I'll continue to be with willingness to play the up move towards 10,630, 10,666 kind of level.
Okay, gentlemen, we'll leave it at that. Thanks so much, Gaurav, as well as Chandan, for joining in today. Really appreciate your time. Okay, now let's move the discussion slightly away from today and now to what could happen in the near term as well. Chakri, we will talk about the today and now too, but I just want a couple of thoughts from you. The last few days, we've seen a surge in a few pockets which were lying low. Real estate is a prime example there. I mean, we're talking about Oberoi right now. Nonit was just talking about that. That stock, Godrej Properties, etc., all of them moved up. Raymond arguably is moved up because of the land development thing. Is it a bit of a return of flavor of real estate, and is it very selective?
One, it is selective, but second, you're also seeing evidence of just not the real estate companies. Oberoi is also very good. Its revenues were up strong. The margins are strong. So that indicates there's not too much pricing pressure in selling its residential units. And on the other hand, you look at companies like Vishakha Industries, HIL Limited, which all supply building materials like either rooftops or construction blocks. Those guys are seeing actually a margin improvement and an improvement in their revenue growth rates. And so all this is an indication that there is a pickup of activity, both residential and to a little extent the commercial activity.
Interesting. So would you believe that there is a bet to be taken not necessarily only on good real estate companies which may show an uptick, but to the suppliers in a meaningful way as well?
Yes, indeed, because because most recent corrections, all these stocks have corrected, uncertainty over banks, funding costs, etc., have been another reason for the correction. Now, these are all these stocks, for example, the construction companies, are all trading at probably about 12, 14 times for a 20% plus earnings growth. And so in that kind of environment, I think there is an investment case to be made, both for the short term as well as for the medium term. Now, and the bigger real estate companies have shown a propensity now to actually push inventory out so that to get their sales going, which is again good on the return ratios.
Neeraj, interestingly, there was a tweet yesterday from Twitter handle of CMO Maharashtra where they said that the CM has approved the scrutiny committee report on Mumbai development plan for 2034, which could pave the way for implementing the new development program for accelerated growth for Mumbai city. So I'm presuming if actually this goes through, this will provide some bit of fillip to at least the realty players which are there in the city of Mumbai. I think this was pending for a really long time. I don't know, it's a long-term game for sure.
I'm just wondering how will you and I reach office? That's the bigger problem really in the lower area.
Okay, I'm not going to complain about infrastructure, which I usually keep doing to you. But let's move on to the other space. I guess the oil marketing companies, they bounced back in today's trading session. If you look at a couple of the gainers on Nifty, BPCL, HPCL, IOC, not substantial gains definitely, but they bounced back considering the sort of correction that we've seen in the past. Chakri, we've been talking about how the crude oil prices have been rising, how that could pose some sort of inflationary threat going ahead in terms of macro picture as well. But what about the oil marketing companies? Because if there was a news in case the oil minister asked them to absorb any sort of losses, it could be a threat to them.
No, that's the biggest overhang on the oil marketing companies. They're pretty inexpensive stocks. But whether they will be forced, there'll be a subsidy or there'll be some kind of price controls is the biggest issue. So from that perspective, we're avoiding oil marketing companies for that reason. And the other hand, Reliance is looking good for the same reason. Is that while its refining margins might kind of be a bit soft, but its petrochem margins are likely to show very strong numbers when they report earnings. And also Jio is firing on all cylinders, and it's an undervalued stock. So that's the way we would approach the oil space through Reliance.
Okay, since you mentioned Reliance, a word on the telecom space as well. The latest subscriber data that we see now, they're gaining traction even in the rural market.
Indeed, and and if you look at the latest ARPU of even Bharti, it's actually down. Correct. So this is translating into a rural spend to sign up lower ARPU customers who are coming into the scene. That's reflected not just in the case of Reliance, but in the case of all the other incumbents too. And it's Bharti's loss and other existing players' loss, which is Reliance's gain. So clearly, for once they're showing fastest turning to operating profit margins, which is a damn good thing for Reliance Industries.
Interesting. Chakri, I want to talk about what would be happening to exporters and companies which would see a higher export component and therefore increase in maybe capacity utilization as well. But just before that, one small question on this whole retail theme that certainly seems to be right in the thick of things. I don't know, it's got to do with Walmart, Flipkart deal, which has gotten these stocks excited, but almost everything is doing reasonably well. Trent is sitting at multi-year highs. There's some talk of Vishal Retail or Vishal Megamart being approached by some people for 5,000 crore valuation, which 5 years ago, nobody would have thought of. Shoppers Stop has this deal with Amazon. They are putting out some very interesting things as well. Have you studied this space? Do you like things within this pocket?
One is all the retail companies from pure trading perspective have corrected in the recent past. Second, from a more structural perspective, with the emergence of various logistics companies, it has transformed both their walk-in through the store as well as their online channels for the same retail company to push its products online as well. Now, when things start looking, and with an increased high street presence in addition to a mall presence, certainly the same store sales numbers have shown improvement for including Shoppers Stop recently. So on back of that, India is still in very early stages of its retail stage development, and therefore I think we will continue to see a strong interest from outside players in this space.
Okay, and therefore is there merit in trying to own any of these existing listed retail players from the current valuations, Chakri? I mean, is there a model that you like? If you do.
Yeah. No, I think still it's a pretty evolving space because the different guys cater to different segments. You have a Future who is at the low end of the segment, Shoppers Stop spread across. So from that perspective, I think they cater to different segments. But if anything else, one would focus more on the mass end, which is more the Future Group's strategy, which will probably see the biggest sustained growth over a long period of time.
It'll be interesting to see that. The second bit is, Chakri, what happens to players which are by virtue of either export growth picking up or select pockets within the domestic space picking up, seeing their capacity utilization levels moving up. We've seen evidence of that in certain cement names. For example, India Cements was saying that their capacity utilization levels are skyrocketing. I mean, maybe a couple of other pockets to doing that. How are you playing this theme?
Yes, for one, cement companies have seen volume growth but less pricing growth. But again, like you just mentioned, India Cements is a pretty inexpensive stock, trading at about $70 per ton. So from that perspective, any marginal improvement in capacity utilization translates big time to its earnings and therefore to its valuation. So second, you're seeing companies like Capacity, Nagarjuna Construction type of companies benefiting from the infra growth. And on the export side, you have a number of chemical companies. IT, of course, is a different ball game altogether, but chemical companies are benefiting from this.
Well, IT seems to be back in action once again today.
IT is back in action.
Wipro is trading in the green ahead of its numbers. It's trading with gains of over 2%. The Nifty IT index, in fact, is the sole sectoral gainer as we speak. A word on IT then, Chakri, before we let you go. We've seen, numbers coming in from TCS, bit of disappointment from Infi with regard to guidance. This is the place which has outperformed so far, at least the other sectors. Do you think this trend will continue? Are there more legs to the rally?
I think this trend will continue because the valuations are still attractive. If HCLT, the numbers are still trades at a discount to Infosys on one hand. But again, incremental news like, for instance, the H-1B spouse not being allowed to work because of the visa thing which came about yesterday, can be an incremental negative. But again, from a company's earnings perspective, I don't think it will really matter.
Interesting. What is, to your mind, the best way to play the export theme? I know people will talk about IT, pharma, etc. But do you believe companies within the specialty chemical space or a couple of other? I mean, one thing is to say that all manufacturing will gain if indeed they are able to cater to the right markets. What's the best way to play the export theme?
I think still it's metals as well as suppliers to metals, companies such as Rain Industries, which supply to the aluminum industry. I know that aluminum going through Rusal, etc. and all that. So in spite of all that, so if you go back to when before the Rusal ban was imposed, we were still talking about a very strong outlook for the aluminum industry. And Rain Industries supplies raw materials to that industry. It trades at pretty inexpensive valuations. The company has done some company-specific restructuring as well. So companies like that, Philip Carbon, largest carbon black supplier in India, and everything with the color black in the world has a bit of carbon black. So they benefit.
Okay. Interesting. So there are some different ways to play the export theme. Don't just get looking at only pharma or only IT. Yes, those are the poster boys, but we have a clutch of other pockets that could actually benefit quite a bit. And Chakri Lokapriya believes that stocks or companies which have actually multiplied 10x already from the lows could benefit as well. Chakri, take a moment to thank you for joining in today on Indian Open and being with us today.
Thank you.
Much appreciated. Well, Neet, what stands out?
Well, Neeraj, to my mind, it's only IT right now because the markets are still trading in the red, 10,596, way below the, not way below, but still below the mark of 10,600. Something like Tata, LXC, and IT Tech. Remember, these were the stocks which saw a bit of profit booking. So that's telling you at lower levels, maybe traders, investors are waiting for some bit of dip for these IT companies. They've been bought at every dip. NIT Tech, in fact, trades almost at day's high. NIT Tech is sitting with gains of 4%. And something like Bharti Airtel, it's up maybe on back of news and also the merger news with Indus Tower and Bharti Infratel. Watch out for UltraTech. The numbers do come out today. And looking at ACC's number where we were talking about the cost pressures to persist across the sector, ACC showed a good performance at least in the last quarter. But let's see how UltraTech Cement performs. Certainly, we'll look out for capacity utilization considering the JP Associates plants will also be included in the earnings this time around. Besides that, Neeraj, the India Volatility Index, I think that had a significant downfall in yesterday's session. That's jumped in the opening session, so that's not showing a great picture. It's once again above that crucial mark of 12.5. India VIX is trading with gains of nearly 7% right now.
Well, interesting things and interesting trends to watch out for throughout the day today. This is just the first 1 hour. We need to slip into a very quick break. But up next, we talk about 2 or 3 key things. Fourth quarter, seasonally weak quarter for the agricultural sector. We discussed what happened and what went wrong with Coromandel International. Rohan Gupta joins in to speak about that. Connect with Sandeep Batra of ICICI Prudential and Anand Deshpande of Persistent Systems for the earnings fine print as well.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with Indian Open right here on Bloomberg Quint. Flattish start for the markets, but anything but flat for the insurance plays, particularly ICICI Pru, India's second largest private life insurer, put up a good show in the fourth quarter. Net premium grew 14% thanks to higher renewals. Ridhima Saxena, my colleague, sat down with the executive director, Mr. Sandeep Batra, to decode the numbers in further detail. Here's a slice of that conversation.
For the year, what is important is how our value of new business has grown. Our value of new business has grown by about 93%, and for the year we reported a number of 12.86 billion compared to about 6.66 billion last year. This is on the back of the APE growth on an overall basis growing at about by 17.6%, and within that the protection APE grew by over 70%. So I think you'll also notice that our persistency has been clearly one of the best that we have delivered. We delivered a 13-month persistency of about 86.9%, which we believe is clearly the best in the industry. And when we are talking of our 13-month persistency, we have not put single premium on its base, neither have we added group business. So this is pure retail, hard-working persistency, if I may say so. Persistency, as you are aware, we have been saying for a long time, that is the single most important criteria to measure the quality of the business that we have delivered.
Absolutely. Although a late entrant in the protection business, IPRU has been able to grow it as part of its portfolio to about 4%. But that doesn't take away the fact that the portfolio is still very much bent towards ULIPs, which make up to 83% of the entire business. So how do you plan to balance it, if you plan to balance it at all? And now that the protection share is increasing steadily, by how much do you see it going up by in the next year?
Well, there are two different segments. So I think when we are talking of the unit-linked business, it has to be seen in the context of overall savings business. Within the savings business, you have got unit-linked, you have got participating, and you have got non-par guaranteed kind of a products. All these products have a cover which is 10 times the annual premium. So they are very similar in nature. Unit-linked has an advantage of low charges to the customer, low surrender charges, as well as the choice of moving between asset classes. You can move from 100% debt to 100% equity or anything in between. So it's a great product from a consumer point of view, and that is why we believe that the customers choose this product in our case. Protection is a different segment of a business. The premiums are small. To give you an example, 10,000 rupees will get you a cover of about 1 crore for a youngster. On the savings side, if I want 1 crore of cover, whether it's unit-linked to par or non-par, I'll probably have to spend 10 lakhs. So I don't think so we should be looking at both these. You should be looking at whether it is unit-linked or protection. It is savings and protection. These are two different opportunities, and we would like to capitalize on it on both these opportunities. And from our perspective, what is important is that we are focused on selling customer-centric products, and that is where you will see it in our you will see it in our portfolio, you will see it in our persistency, you will see it in our cost ratios. So that is coming out.
How much do you see the protection business increasing if it is 4% today?
It's very difficult for me to give a percentage, but structurally, if you will see, the savings business has largely been growing in line with nominal GDP of this country, maybe a little ahead of that. Protection, given the shorter, smaller base, is going to grow at a pace which is faster than the savings. So percentage difficult to talk about, especially given the context that you are seeing an increasing formalization of the economy, which is resulting in increased financialization of savings. So you will do expect that the savings business also to do well.
A question that may have been asked to you a lot of times, considering that ULIPs are ULIP products become attractive as the markets are doing better, but as the markets don't do very well or are in a volatile state, the interest in ULIPs also gets, proportionately decreased from the consumers. Now, considering that your portfolio is so bent towards ULIPs, how do you kind of see that risk, panning out for you?
So if you see, first you have to see unit linked in the context of how does it compare with the participating and a non-participating product.
Absolutely.
The charges for a customer are significantly lower. I think that is in a unit linked kind of a portfolio. The cover is very similar. It's 10 times the premium, whether it's a participating product or a unit linked product. Within that, if you see, unit linked is not necessarily only an equity product. It is an asset allocation product, and if you'll see, you will have a mix of about 50 to 60% going into equity and the balance into fixed income. Now, what is heartening for us is whether a person has got 100% equity or he's got 100% debt or a predominantly debt portfolio, predominantly equity portfolio, the persistency is equally high. I think that is important. Now, over a long term, we do believe that the equity markets will give a superior return while there may be short-term volatility. So if you're going to invest over a long-term basis, and that's what you should use insurance for, on a 10-year horizon, you do expect to make a decent amount of money.
Okay, that's ICICI Pru, and the stock has done reasonably well for itself, 4.5% in fact. Reasonable would be an understatement considering that it went up about 7 or 8% in trade yesterday as well, and 3.5 million shares traded already. I'll just borrow one quote from a note that I saw which said that the discount that exists between the two players, which is ICICI Pru and HDFC Life, should narrow after what they have done in the Q4. I think across parameters, the numbers were very, very robust. The 61-month persistency ratio at the end of Q4 for ICICI Pru showed an improvement. It didn't happen for HDFC Life. It went down to 47% in Q4. The Q4, 61% at the end of Q4, the 61 persistency ratio as well. So, interesting quarter, and it was showing in the way the stock was doing yesterday and showing in the way the stock is doing today as well. So good gains for ICICI Pru in the session today. That aside, I'm just trying to look at what's gaining well before we do the next discussion. And in a bit, we'll be talking about the Fortis deal, which is, of course, the biggest draw of town today. Tech Mahindra, Wipro, TCS, HCL Tech. IT seems to be making a bit of a comeback, so good going there. GAIL has disappointed. Gaurav, Bissa thought that there is some upside potential here. It started off on a negative note, so people who took trades out here, maybe your stop losses have been hit, maybe not. I don't quite remember the stop loss level there, but do remember that somebody had said that the numbers could be good. Anyways, more on that later. For now, for full focus towards the Fortis deal, remember Radiant Life, they have come out with a revised deal for Fortis as well. They've offered 1,200 crores for the Mulund Hospital without due diligence, but it's a binding proposal. Abhay Soy, chairman of Radiant Life Johnson, on Indian Open. With me, of course, Yatin Motar Johnson on the conversation as well. But Mr. Soy, just an initial thought. It's an interesting deal. You're revising the bid for you're revising your Fortis bid. No due diligence for the Mulund Hospital. What have you taken into consideration when you've revised this bid?
So essentially, we were looking to bid for the entire set of assets, but of course, we want to do it post-diligence. What we've been given to understand is, and from media reports and what the board said in their media outs, that they're only looking at binding bids. The real rationale perhaps for this is that there is a requirement of cash. So what we are suggesting is that why don't you sell one of your 35 assets, create that elbow room, so you'll have 1,200 crores of cash. This particular asset sits on RHT books at an NAV of, I think, 680 crores. Net, even after paying that off, you will have about 650 crores of cash with you, and that should give you enough elbow room to allow people to do bidding over the next 3, 4, 5 weeks and bid for FHL. So we're saying, look, why don't you open the floor for us as well as other bidders in that case?
Okay. Mr. Soy, this is Yatin joining in from the research team. One clarification that I required from you is that why, you believe that Fortis, the hospital business is a valuable asset, do you think the minority shareholders will agree to the slump sale of the Mulund Hospital? Because, the company has been talking about, or if you look at the other bids also, the competing bids, they have not been talking about any kind of a slump sale. So do you think that will create value for the minority shareholders? Of course, your point is taken that the company requires, cash to immediately pay off creditors and employees. But instead of buying out the Mulund Hospital, would you be also exploring a direct fund infusion, which is the case with other bidders as well?
So let's look at the three options the company has to create cash to start with, and that's what we're talking about. One is that you infuse equity directly into the company. Second is you leverage if that leverage is available. Or third is that you sell one of the assets. If you look at investment through one of the strategic investors, okay, it's going to be very difficult thereafter to discover true value for the minority shareholders, because thereafter other strategics may or may not be interested. It's unlikely the other strategics will be interested once the strategic is already in the fray, in the company. So what we are suggesting is, if debt is available, perhaps that's a better route. If not, then you sell one of the assets, which represents maybe 6.5% of the total bed strength that you have, has about maybe a 55-57 crores of EBITDA, has a lease amount to RHT of a similar amount. So effectively, what you're getting is, when you're selling it, we're looking to buy it at a multiple of maybe 20-21 times.
And sir,
and that allows for elbow room for you to permit diligence by all the 4-5 parties that are there, because then there's no real excuse, and that would really discover the best value for minority shareholders, wouldn't it?
Okay. Abhay, also I would like to understand the fact that you are interested in the hospitals business. You plan to keep the diagnostics business or SRL separate. So you are only looking at the hospitals business, right? This is what I could understand from your offer. You would like to keep SRL as a separate asset. Of course, the scheme of arrangement or whatever the demerger process is, you would not be interested in buying any kind of a stake or any kind of a minority investment also, as far as the diagnostics business is concerned.
That is not true. We would be interested in SRL business as well, okay, and we would like to participate in the diligence of that, and thereafter make a binding offer. Okay. Right now what happens is we understand the hospital business, so we're able to make a non-binding offer which is subject to diligence.
Okay. Okay. And if you look at the RHT part also, you said that you will be making, attempt to do a rights issue, to fund that acquisition as well. So how do you go about it? Do you think since the RHT sunset date is near, the overall cash requirement is near, the process of fund infusion from Radiant side has to be quick? So in that case, have you been tied up for, financing and funding? Would you be open to a merger with Radiant Life, or would you be, would you like to be the promoter entity for Fortis Healthcare?
So we have right now proposed an all-cash deal.
Okay.
We don't want to complicate it further by merger. That is something which can be thought through subsequently. Rather than confusing shareholders about what the true valuation of Radiant should be and so on and so forth. So we kept it aside at this point of time.
Okay. Okay. So right now it's a plain vanilla deal, and you have a backup of KKR or private equity investors or bank funding for this. Have you tied up or done the reverse calculations from your side as well?
Of course.
Okay. Okay. So KKR or any other investor does not come directly into Fortis. They will probably infuse the fund, or you as a promoter would directly look at funding Radiant Life, and then Radiant Life will directly look at all cash deal, right?
That's true.
Okay.
Okay. Abhay, thanks so much for taking the time out and joining us and giving us that perspective. All the best with a potential deal.
Thank you.
Well, that's the management of Radiant Life. They have revised the offer. Well, this makes the stack very interesting, Yatin, and doesn't seem like this will be the end of it, right? We will have one of these bids eventually coming out, but that's not saying that that will be the final call as well.
Yeah, and Neeraj, we have a whole host of bidders coming in, and every bidder has a separate structure, and that is the interesting part. We have Manipal on one end, which is looking at a NCLT process, which is basically demerger of the hospital business and then, merging of the SRL business into the remainder company. Then we have the Burmans and the Munjal family office, which is talking about a direct fund infusion into Fortis Healthcare and then taking subsequent decisions. We have IHH, which says that, hey, I'm here to do a 650 crore preferential. You give me 2 board seats and proper representation, and then I look at a fund infusion of 3,350 crores, in which case I think it's slightly unfair because there will be a massive dilution for shareholders of Fortis Healthcare. And then you have, Radiant Life, which is talking about an open offer, a rights issue. So, every bidder has a separate structure. Probably we need to really watch as to how the independent committee really evaluates each and every bid. Because they need to be very careful as to how they handle the SRL piece, how they handle the hospital piece, and how they handle the overall dilution and representation in terms of board seat when it comes to Fortis Healthcare.
Yeah, this would be interesting. Thanks, Yatin, for putting that into perspective. Well, that's as far as Fortis goes. Now, 2 discussions, but let's have the first one, which is the agri space. I think the results of Coromandel led me to think of getting in Rohan Gupta of Edelweiss to talk about, 1, what happened there, and 2, what could happen potentially to the space at large. Was this on anticipated lines? It probably wasn't, because the stock took a fair amount of beating yesterday. But what could happen going ahead as well? He's the Associate Director of Institutional Equities at Edelweiss, and he joins us right now on the show. Rohan, good having you. Thanks so much for joining in. We'll talk about the space at large, but just a brief mention about Coromandel as well. Yesterday, the reaction to the numbers wasn't pleasant, and probably rightly so. The street expects this one to do really well. Previous interactions with the management seem to have suggested that almost everything that needed to go right for this space and for the company was going right. What led to this performance?
Yeah, Neeraj, as you rightly said, that results of the company was not that great yesterday and was below than what the street was expecting, and that stock has reacted towards that. There were a couple of reasons that their fertilizer business during the quarter has witnessed the increased cost pressure, especially from phosphoric acid and ammonia prices, which was very volatile and has been continuously going up in Q3. Generally, these companies carry some inventory from the previous quarter. So there was the extended cost pressure in Q4, though the company have taken some price increase to pass on that cost increases, but that has happened at the end of February, and also this is a non-season for the company and for the industry, so the acceptability of any sort of price increase in non-season quarter is very less. So even if you increase the prices, you have to offset it by providing higher discount to the dealers, and then slowly you remove the discounts. So that's what generally, Q4 is the tendency. So I think the company's EBITDA margin in a fertilizer business has been affected because of a rise in input cost. However, if I look at that, recently government has increased the subsidy on NPK fertilizer. On DAP, it is roughly worked out by almost 1,500 rupees per ton. Also, companies have taken almost 2,000 rupees price increases during the quarter. So going forward, Q1, I believe that the extended cost pressure which company has felt in a Q4 and that has affected the company's results in the current quarter shouldn't be the case, and their margins will go back to the normalcy going forward. That is one. In agrochemical business, we have seen some weakness. The margins have also tumbled down in the agrochemical business as well. We have to, hear more from the management that why the agrochemical business margins was lower, but I believe that may be because of some rise in input cost and some global high inventory of probably Mancozeb, which would have led to this kind of margin drop. On that, probably management have yet to give a more indication that why the agrochemical margins was down. But as you asked, that going forward, we believe that fertilizer business margins will be in the trajectory what management has always been looking for. So they will go back to the same trajectory.
Rohan, just a question. A couple of marquee investors parked in this stock. Other fertilizer stocks have really gone through the roof. Chambala case in point, and I'm sure each of these have their individual reasons. But with DBT doing what it is doing to the space by and large, and cash flow management thereof, and the general buoyancy, I've heard Thermax say that they're getting orders from the fertilizer sector, which hasn't happened in the last 10 or 12 years, which probably leads one to believe that the management of fertilizer companies are fairly bullish about some upticks that could come into the business as well. How bullish are you on this space, and within this pocket, fertilizer stroke agrochemicals, how bullish are you? What is it you're betting on?
Okay, FY18, the year we just ended now. So in that year, we were more bullish on fertilizer companies versus agrochemicals. The reason being that we were seeing the fertilizer companies was going to show improvement in profitability after almost 3 to 4 years of weakness. From last 3 to 4 years, fertilizer industry has been in a high glut of inventory and the margins have been affected because of that. So FY18, we have seen improvement in fertilizer business. That's why you see that Coromandel FY18 profit has almost jumped by almost 45 to 50% compared to on last year basis. And that has been mainly driven by improvement in fertilizer margin. While on the other hand, agrochemical companies have witnessed slight poor results in FY18 because of monsoon and poor distribution of monsoon, and also global agrochemical prices and input prices of agrochemical companies or chemical prices was not rising, actually they were falling, so that we have seen that there is a roughly -3 to -4% price deflation was there in FY18 in agrochemical companies, and volume growth was also for the entire industry was muted at 7-8%. So agrochemical industry in FY18 actually didn't fare well, they didn't do well, but fertilizer companies did very well. That is primarily coming from the fertilizer margin expansion. Going forward in FY19, though we continue to remain bullish on entire agri space, also being the last year of the government, they have already announced many freebies in a budget, and a lot of focus is there on increasing the MSPs for the farmers. So I believe that net FY19, if also the monsoon protection so far has been quite positive. So FY19 is likely to be good for agri per se, but this year I believe that will be year of agrochemical companies, because for fertilizer companies I believe that margins at best should be holding on that what they have reported margins of last year. There may not be further increase in margin, and rightly so also, because the margins are now at a high end already. While for agrochemical companies, I believe that it is this year going to be better year than the last year. We should be able to see at least 3 to 4% price-led growth, which was missing last year and actually was negative. We should be able to see 10 to 12% industry growth driven by volume. So we are talking about agrochemical industry for FY19 can end up somewhere at 15% revenue growth, and that is happening after almost 2 years, 3 years. So we are going to see agrochemical companies probably looking in a better trajectory than fertilizer in this year, especially in FY19. Company like Dhanuka, PI Industry, Rallis India, UPL, Insecticide India, all these companies we believe that are likely to better perform.
Great, thanks for that lovely insight, Rohan. I'm afraid we are out of time completely on the show. Would have loved to chat more, but I guess we put the points into perspective. Thanks much for taking the time out and being with us today.
Thank you.
That's Rohan Gupta of Edelweiss with his thoughts. Believes agrochem will do better than fertilizer stocks in FY19. The market's just about 1/3 of a percent lower, nothing too alarming, but lower, trading at the lowest point of the day currently. The Nifty Bank too about 0.5% lower. It's a wrap on this leg of Indian Open. Up next is the FNO show. Stay tuned to Bloomberg Quint Live.